Making sure your mortgage gets paid on time each month is critical to your financial health and security. But there are a few different ways that VA buyers can look to make those monthly payments, some of which can actually save you money and trim the life of your loan term. A common approach is budget drafting, which is also known as making biweekly mortgage payments. Budget drafting can be a convenient way for you to reduce interest charges, build equity faster, and pay off your loan sooner. Generally, here's how it works. You pay half of your mortgage payment every 2 weeks rather than make those 12 monthly payments per year. There are 52 weeks in a year, so sending a half payment every 26 weeks means you wind up making 13 mortgage payments in a year instead of 12. That extra mortgage payment gets applied directly to your principal loan balance, which helps speed repayment and cut interest costs. And I want to show you an example of how this can work in the real world. And so let's say that you're getting a $250,000 VA loan at a fixed interest rate of 4.5%. So the principal and interest portions of this mortgage payment, these aren't going to change over the life of the loan. It's $1,013 a month. So over the course of those 30 years, you're going to wind up paying about $165,000 in interest, making those 12 mortgage payments per year. If you make just one extra mortgage payment per year, here's what happens. The total interest that you're paying for this 30-year loan drops by about $30,000. And instead of paying it off in 30 years, you end up paying off this loan in 25. Talk with lenders and servicers about their biweekly mortgage payment options. Some lenders will require borrowers to work with third parties to set up and handle the biweekly payments. That extra work can come with upfront and ongoing costs. Other lenders and servicers may handle this kind of work in-house or otherwise let homeowners make biweekly payments without additional expense. VA buyers should also bear in mind that biweekly payments can hit their budget harder than normal a couple of times a year. So generally 2 months out of the year, lenders and servicers will collect 3 half payments instead of the normal 2. Make sure that you're financially prepared for those times. The beauty of budget drafting is you can set it and forget it. But you don't have to take that approach, especially if setting up biweekly mortgage payments is going to come with costs and fees. You want to avoid costs and fees for biweekly payments. Homeowners can always pay additional money each month or year toward their principal balance. So you can divide your monthly mortgage payment by 12 and add that to each month's payment. Or you can tack on whatever amount you can afford. If you go this route, just make sure that the servicer knows you want that additional money applied solely to your principal balance. This do-it-yourself approach requires more diligence, but it can be equally rewarding, not to mention financially savvy. Paying costs and fees to set up and maintain biweekly mortgage payments just doesn't make a lot of sense. Also, it's important to understand that if you go the DIY route, you're not sending the mortgage servicer 2 half payments every month. You're just paying an additional amount towards your principal along with your regular monthly payment. If budget drafting is something that appeals to you, talk with lenders and servicers about their options and policies.